amount of stability, and then probably consolidation, and then probably the new leg of uptrend.
Okay, Harsha, we'll leave it at that. Thanks so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time this afternoon. Well, but there is pain in the markets for sure, and good time to get in Niraj Shetty, Senior Technical Research Analyst at HDFC Securities as well. Niraj, good having you. Thanks for joining in. How weak is this? Does it look like the pain will last?
Hi, good afternoon. I think I must say that this is a beginning of actual pain in the Nifty. We have seen pains in the broader market indices since last month. It has started, and from the all-time highs of 22,526, the recently Nifty has started its actual downward correction. This is a good reversal point. I believe the immediate supports have been broken. Nifty showing some kind of a reversal. At this point of time, I'm expecting the next lower levels would be around 21,400 to 21,300 odd levels for the Nifty in the next couple of weeks.
Okay, and what leads this charge, Niraj? If you were to bet on things which will be the key reasons for the index to behave the way you are predicting?
I don't track the reasons to market
what I mean is
what market moment. Yeah.
No, what I mean is what will drag the markets lower?
Yeah. As far as the technicals are concerned, there is a possibility of downside coming up in the mid and small cap segments. We have seen that around a 10% decline from the higher levels in the mid cap and small cap segment. I wouldn't be surprised if you are going to see another 10% from here on. I'm expecting 43,000 is a good support for the mid cap 100, and around 13,000 is a good support for the small cap 100 NSE exchange in the near term, at least in the next 1 month.
Okay, we'll talk about specific stocks on the other side of this very quick break. We need to slip into one, but it's not looking good, viewers. Unfortunately, we are not making any attempt at a bounce back for our markets, especially at the broader end of the spectrum. So things look tough. We'll talk more about this on the other side of this very quick break. Stay tuned.
a hunt right now. It's actually a hunt to see what's in the green in this market. For example, of the Nifty Small Cap 100, 98 stocks are in the red, and just about 2 of them in the green. I mean, even the Nifty, frankly, if you take the ITC run-up out of the equation, it's a completely different story going on below 22,000, and unfortunately just sliding in that direction right now. The biggest contribution to the Nifty fall today relatively is Reliance Industries, L&T, NTPC, Bharti, all of them. We're talking about how economy and economy-related stocks are taking the biggest hit. But the fact is that it's an overall picture which is quite bearish. Nagaraj Shetty, people watching may be wondering, is this an opportunity to pick up quality counters? Is there anything like that you see, especially in the large caps?
I think we have to wait. We have seen the beginning of a correction from large cap segment, especially from benchmark as well. And I'm expecting more pain to come, especially in the large cap. We have seen some deep cuts in the mid and small caps. Now, I think this is a turn for the large cap as well. One has to wait for bottom fishing in large cap stock as of now.
Right now, the bottom fishing is a deep sea dive. Maybe difficult to find where you will see those values. Meanwhile, Anushi is joining us with an interesting list of stocks that she's put together. Those that have managed to weather the storm, that are not doing too badly relatively. Anushi, what's on that list?
Right, Tamanna. As you mentioned, it's a hunt, it's a bloodbath. But there are some stocks that have still sustained these gains over a course of period. Now, first on the list is HEG, which is up about 6.5% in the last 7 sessions. The volumes are also quite decent on the counter right now, about 2 times its 30-day average. And the stock did see about a 52-week high in the start of Feb. Moving on to Hitachi Energy is another one, which is like about 5% up in the last 7 sessions. The stock again marked a live high of about 6,800 on just this Monday itself. And just more on that, the company also has an order book of about 7,552 crore, which shows about 22 months of revenue visibility. And last on the list is Intellect Design Arena, which is up about 4.6% in the last 7 session period itself. Volumes again over 4.7 to 5 times its 30-day average, while the stock has seen about a 21% gain in this last 1 month itself. In fact, the stock was also trading at a live high in today's session as well. So these are the 3 stocks that I've picked up for today's session.
Every rule needs an exception, because the exception proves the rule. So yes, even in a massive sell-off, you will have some which are doing okay. But Nagaraj, I want to come back to you on, especially in your micro cap holdings and your small cap holdings. If investors are watching value being wiped out, what do you do right now? I mean, we are playing out quotes from top market experts who have been on Twitter and other social media putting out what they're saying. And Shankar Sharma, for example, I don't know if you can pull that up, said that the one train that you should jump off is the small cap train when it's going in this direction and in this phase. The only train you should jump off when it's going at full speed and not when it's slowing down is a small cap bullet train. Now that bullet train, so to speak, is slowing down. My question to you and what viewers would want to know is, what do they do right now? If there is largely the consensus seems to be more pain coming, then what is the direction they can take?
I think better to exit the long positions if the investors are really holding and riding the recent uptrend in the small cap segment over the last few months. I think it is better to book profit and come out of that stocks what you are holding. You may be getting a good percentage, you may be getting a small loss, but I think better to come out of the some small cap stocks which are running into a deep correction. I'm expecting more pain to come in small cap, no doubt about that. The overall chart pattern of the small cap is looking weak. 13,000 is going to be the next support, immediate support for this mid cap, and this kind of a decline and we are likely to see, and I'm expecting it is a better opportunity to go shorts in some of the small or mid caps, those who are in future and option segments. I think that's going to be a better strategy at this point of time.
Okay, so that's one angle, and maybe some more pain in small caps, despite the fact that there are some which are holding out. But since the story of the day is the fall in small caps. Let's get my colleague Mahima to talk about which are the ones that have taken the biggest hits. And Mahima, I'm sure it's not too difficult to find that list. Maybe what is difficult is to figure out what to omit, because there's just a big list out there which has corrected quite seriously.
Absolutely, Niraj. It's a very big list, but the top four that have performed the worst include first one, IIFL Finance. Well, IIFL Finance has gone down by 38% in the past 7 sessions. Now, this is because the RBI barred IIFL Finance to provide fresh gold loans, and they did find supervisory concerns in this. And this is because IIFL gold loans are around 32% of the total AUM. So this is the major reason why IIFL has taken such a big hit. Then we have Swan Energy, where the stock has fallen around 34% in the past 7 sessions. Now, this is because NCLT has directed Swan to hold a board meeting for their JV with IFCO, where they have to address the minority shareholder concerns. And they've also raised a fund raised via QIP of 3,300 crores. Now, then there is RITES, which has fallen around 23% in the past 7 sessions, and this is because, as per a Nuvama report, mutual funds like Quant and Nippon India have exited have sold a certain amount of stake in RITES. And then lastly, we have JM Financials. JM Financials has fallen around 23%. Now, this is because JM Financials was again directed to stop lending against shares and debentures and also IPO. And their financing is done in very less margin. So, JM Financials has also taken a hit. So, these were the 4 worst performance on the small cap index in the past 7 sessions.
Okay, so interesting to understand exactly what Mahima is adding to this is not the largest losers or the biggest losers today, but the biggest fall from their peak. So that gives you a sense of where value has been lost for investors. Nagraj, anything that would be on your bottom fishing list when things sort of settled right now? Are you seeing attractive opportunities out there, especially in the larger names?
I don't find any that kind of confidence right now, because I'm expecting more decline in the stocks, particularly in the mid and small caps as well as the large caps. I think one needs to wait when the time comes and around the lower levels, you'll get a lot of opportunity to get into. I think better to wait at this point of time. I have stocks for shorting opportunity, which is giving, and I think one needs to ride the trend, which is on the downside right now.
Nagraj, we usually ask you for a BT-ST or an ST-BT. Today, I'm going to ask you for an ST-ST idea. Sell today, sell tomorrow. What do you do in a market like this?
Yeah, I have 2 stocks right now. The whole trend, tide is on the one way on the downside. So many stocks are available on the downside, and I have 2 stock picks, NMDC and IOC. Chartically, if you look at the NMDC, it has witnessed an amazing rally over the last few months, and the last 1 to 2 months chart pattern is indicating this stock has made an important top reversal around 245, 250 odd levels, and the decline has started. I think this downtrend is likely to continue. Currently trading around 204.75, around 205. One can look to short at this point of time, and the target would be 190 in the near term, and one can place a stop loss at 212. The second one is in oil marketing counter. The OMC IOC, Indian Oil Corporation, is looking weak at this point of time. The overall chart pattern is indicating a formation of important top reversal pattern. It has moved below the important support as well. Currently trading around 162.50. One can look to sell at this point, and the target would be around 151, 152, and one can place a stop loss at 168.
All right, so those are the ST ideas from Nagraj Shetty. Thank you so much, Nagraj. Great to have you on the show today. We'll take a very short break. But on the other side, we're giving you a sense of what's happening in the F&O side of things. The carnage, meanwhile, continues. That's the word, really, for what you're seeing in the market. How long the pain will last is the big question. We're coming back with more on the other side of this break. Welcome back. The Nifty just putting its nose above the 22,000 mark, but thereabouts. I wouldn't even call it a recovery from its lowest levels, definitely from the day's low. Yes, there has been some extent of recovery, but the pain very much continues. Quick look at what's happening in small cap and the mid cap indices. So out of the 250 in the small cap, 250, 247 are in the red. In the mid cap stocks, 144 out of the 150 are in the red. But all of those, if you look at the intraday chart, slight, very slight tick up. I don't know if it's anything to take heart from, but Agam is standing by to break it down. There was Bank Nifty expiry today. Agam, clearly a day of pain, and did you see that reflecting as well?
Yes, so it's the Bank Nifty expiry, and I wouldn't really call it an outperformance considering the Bank Nifty is also down, but it hasn't declined as much as the Nifty or, for that matter, the broader markets. I'll come to that and talk about Bank Nifty in just a bit. Let's start by taking a look at the Nifty. Nifty looking at a drop of well over 1%. That does mean that there's a little bit of trouble there as far as your broader markets go. So about 1.4% cut there. And again, no change in open interest. I will hardly any. In fact, we're looking at a nearly 1.3% increase there. So the trend that we've seen in the last 8 to 9 sessions continues. Very little change as far as your overall open interest for the March futures go. And as far as the Bank Nifty is concerned, let's pull that up as well. Again, just about a 0.4% cut. And the Bank Nifty, in fact, in the last 10 minutes has moved back well above the mark of 47,000. So that's also something you need to keep an eye on. And of course, open interest has moved up by around 3.7%, but it's been relatively lackluster for both the key index futures. Let's talk about the options market. We go into a weekly options expiry for the Nifty as well. Remember, it's teased and tested the 22,000 mark on the lower end, and naturally because of that we've seen a lot more writing in terms of calls, well, expecting the Nifty to weaken, perhaps weaken further tomorrow as well. And 22,200 as a call where we've seen the most amount of increase in OI, which means a lot of option writers have been activated around there. Moving on, in terms of your overall open interest distribution picture, 22,500 mark now moves further away, and now we're looking at a significant amount of call writing through and through all the way to even 22,000, even though the Nifty momentarily has moved up above that mark, and from lower on strikes we don't see too much change in the put open interest, which means that at the moment, option writers are more interested in writing calls, not as much about writing puts. And of course, as far as the Bank Nifty is concerned, at the moment, we are looking at, the index defending 47,000 right now. That's where we see a most amount of traction there, as you can see. And I reckon that a lot of these traders will have taken the short positions on calls as well as puts, thereby making the best of their option premiums in the dying minutes of the weekly options expiry. Finally, coming on to stocks, let's take a look at that. Of course, weakness all round except for ITC, HUL, Metropolis, Power Grid and Bata, all of them looking at fresh shorts building in. And even in terms of stocks, which are seeing unwinding in open interest, there's largely longs unwinding. Nalco, Sale, MGL, Coromandel, as well as Interglobe Aviation. All in all, not a market which is looking good, but I reckon that today it's more about the broader markets than the benchmarks.
Yep, it is. Thanks, Agam, for putting that into perspective, the derivatives trade. And let's get in somebody who looks at this so closely. Rahul Sharma, Director and Head of Research at JM Financial Johnson, to talk about what the derivatives and the charts are suggesting. Vijay Chopra of Enoch Ventures on the fundamentals. Chaman, thanks for joining in. Rahul, how bad does the screen look, both charts and derivatives combined?
Yeah, so it's anybody's guess. It definitely looks pretty bad. Until yesterday, it was the Nifty which was not part of this correction, which is ongoing in the small cap and mid cap space. But today, it seems like Nifty has joined the direction, and it is actually playing around with that 22,000 support area, which is not only a psychological level, but also the maximum put writers which are present on the monthly contracts as well. So, it's kind of a make or break area for the Nifty. My sense is if we are able to somehow we've somehow managed to just trade above that in the last 30 minutes of trade. But, ideally the markets are heavily oversold and a bit of bounce back can be expected from these levels. Silver lining is Bank Nifty is not as bad as probably the Nifty is. And private banks essentially are looking pretty robust, pretty strong. And once Nifty stabilizes, I think a good sharp bounce back can be expected in this space.
Actually, Rahul, sorry, I wanted to ask this to you. How important would the role of PCR be? I know Vijay also looks at these things very closely, but Rahul, I want to start off with you. Put call ratio, the number at 0.6, 0.7, if I'm not wrong, that usually kind of brings about this turn, right? Does it happen the same way every time, or this time could be different?
Yeah, so we essentially club, at least 2 or 3 other indicators, not just put call ratio. So, for example, if it is the VIX, which has hit a recent high, plus the put call ratio going into heavily oversold territory, that adds up the conviction. Now, what is happening is today, tomorrow we have the weekly expiry for the Nifty. That should reset the put call ratio by a significant margin, and we should be back to again square one. So just looking at one metric may not be as may not give you as conviction for a reversal, but if it is coupled with 1 or 2 more indicators which also scream oversold. So for example, the RSI, if it is in a heavily oversold territory at an absolute bottom of the last 12 months, that should be sort of a strong call for a reversal. At this point in time, it is definitely caution advised, not calling for a reversal, but there is a slight hope looking at the way Bank Nifty is positioned.
Look, I'm looking at that advanced decline ratio and it's not looking too hopeful. Vijay Chopra also with us, MD&C of Enoch Ventures. Good afternoon, Vijay Chopra. Great to have you on the show today. Are you seeing a slight recovery last few minutes, ever so slightly, at least on the Nifty coming in? Now, the smart investor will look at buying opportunities. And the question will be, will you see a turnaround as early as tomorrow morning or a few more days of pain? What would you reckon?
I reckon, Tamanna, that, I've been talking about this pain since almost January.
Yeah.
And, this is what I was time and again telling, and I think Niraj would agree to what I said. Several times I said book profits, wherever there is euphoria, wherever there is froth, wherever there is, we've seen irrational valuations, especially, when I said railway stocks, one should book profits. So some of the stocks were down 20%. So I would recommend that, wait for a while if you want to get into it afresh. I've been talking about shifting from small caps, mid caps to large caps. So nothing has happened to an ITC or a Kotak or an HDFC Bank or so to say L&T, which has a slight 2% fall, or a Hindustan Lever or a Dabur. We have not seen these stocks falling down by 20%. So definitely, the call is that better stay away from mid caps and small caps and be into the larger ones, larger companies which are better, haven't moved. Look at these companies, HDFC Bank, ITC. ITC yesterday I recommended on a channel that I have a target of 800 on this stock. And what a wonderful opening today we have seen. And the entire block was done at 400 rupees and the stock has been holding up in spite of the carnage in the market. So all said and done, be in the large cap space and wait for a while. Let the dust settle down. There's no hurry. Markets are not going to close down tomorrow. There would be opportunities galore, in the markets. And I think that, these corrections are healthy and they should happen. And they were imminent. And I think that, there might be some more pain around the corner. But yes, markets would come back sharply. I take the point where Nirav says that, when the PCR Nifty is 0.5 and Bank Nifty is 0.6, so markets are definitely oversold. But we really don't know whether it's going to be tomorrow or Friday or maybe Monday. Who knows that, but markets should rebound. We are not going to see any, major. I don't think that it's going to rebound today. But yes, it's round the corner. Maybe a couple of days, or maybe tomorrow. I really don't know that.
Okay, fair point. Let's also get in a quick view from Dilip Bhatt. He joins in right now. Needs no introduction, really. Dilip, thanks so much for taking the time out. What are you observing? Is this the broader end of the spectrum, particularly PSUs, real estate, etc.? Will this last, or you reckon some bit of money buying might come in?
Thanks a lot, Niraj, for inviting me. I think, surely, market looks very, very apprehensive. Needless to say that the sell-off has been pretty bad. But once again, Niraj, is the same old story that we always hear, that the greed has overtaken. We may keep on blaming X, Y, Z for whatever has been the fall. But the moot point is it was the greed, especially in the mid-cap and the small caps. I think people were extrapolating 1 or 2 years and planning for next 4 or 5 years. And that doesn't really happen with mid-caps and small caps. They still have to demonstrate enough track record. So having said that, I think, yes, markets still continue to look a little more apprehensive. Even a further fall from this level cannot be ruled out, because the valuations are significantly ahead of the fundamentals without any doubt. And India will remain ahead of the valuations will remain ahead of the fundamentals. But from the current level perspective, I think one should still wait and watch and need not be in a hurry to buy in this falling market immediately.
Point well taken. But just before we let you go, Dilip, the other question is, whenever you do, or whenever the dust settles, let's say during the earnings, just before the earnings season or otherwise, where are those pockets where which might be the first ports of call, because the growth story out there looks attractive? Because currently everything is getting butchered.
So, well, I think if one were to discriminate, I think the front lines have fallen, but they haven't fallen so much because, of course, they had not risen so much. But other than the front lines, the market is in a shambles. So I would say that rather than sectors, I would still say that going forward, it will be much more stock specific. For example, in defense, if you are going to talk about defense and take the entire sector up, I think that is not how it's going to move up in future. We'll still have a few companies where they'll have to demonstrate their quarterly results, they'll have to demonstrate cash flows, they'll have to demonstrate the working capital intensity of the business, and all that will have to be considered. And that is where I think, people are going to discriminate between good and the bad. And that is what we'll see in the coming quarter and maybe in the first quarter of the next year. So I think we still have about 2 quarters where I think a lot of decisions will play out based on the performances that we expect from some of these companies.
So Dilip Bhatt, Tamanna here. Great to speak with you on the show today. And just to the point that you made of greed and the greed that we were seeing in the market, small cap and mid cap. The point is, why now for the impact of that to come in? The conversation has been on from the last several months that there will be a sell-off. Valuations are rich. They are concerning. I'm just wondering about the timing coming ahead of the election season, coming ahead of the stress test for mutual funds. Do you see that as an immediate trigger, perhaps?
Sure. I think, as you very rightly said, all of us were talking about, the kind of run-up that we have seen in the mid-cap and the small caps. But you always require certain trigger points strong enough to shake the market. And maybe what RBI has done, what SEBI is very rightly doing so in trying to give a warning, the stress test that they're talking about for the mutual funds. And you see that one of the mutual funds has stopped taking money for the mid-caps and then you also have so many other small related things about some operator being the X, Y, Z. So I think all these things have played and acted in concert to spook the markets at this particular moment. I think this time around, probably some of these factors were strong enough to upset the market.
Having said that, do you see a quick enough recovery? Because this has been a market, Mr. Bhatt, that has seen a buy on dips and buy on opportunity every time. You still have now a robust and relatively deeper bank of domestic investors, mutual funds who have to deploy SIPs. So is it fair to say that this is not going to be a prolonged period of pain, or is that being optimistic?
I don't think that it's going to be a prolonged period of pain, but the question is, if in a short while it corrects very severely, then who's to say why it should last for such a long time? Having said that, I think one more factor that we should not forget, which has been negative for the market but may turn out to be positive, is that the FII holding has fallen to its lowest since 2008 or 2009. I think that makes that sets the stage that maybe post a couple of months we'll find them trying to enter into the markets with a lot more clarity on the political front. I think which is even obvious even otherwise at the moment, but still I think we'll find some of the FIs coming in and trying to buy, and that's probably something which we think is also going to help the market and provide a solid tailwind apart from the domestic investors and the mutual funds.
Absolutely. That's a big point. The FII money is still sitting on the sidelines and has to be deployed at some point. You just have to sort of grin and bear it for now. Thank you so much, Dilip Bhatt, for speaking with us.
We're about
yeah, absolute pleasure. We're about 10 minutes from market close, and I wouldn't say that the picture is pretty, but it's maybe less painful than it was at the lowest point of the day. Nifty, by the way, slipped back under the 22,000 mark. So this is a market which is trying to find its feet quite desperately. Vijay Chopra, Rahul Sharma with us. Very quick last calls that we can take. And Rahul Sharma, I'll start with you. What would you pick up right now? Would you have a BTST call at all, an STBT call, anything specific on your radar?
Yeah, so it would be a BTST, dare I say. It is the private banks which are, shining through, especially the top tier private banks. Speaking of ICICI Bank, the chart setup looks pretty solid in the falling market scenario, and especially since Nifty is heavily oversold. One bounce back could mean that, shorts could get trapped. So I would rather go with the BTST long on ICICI Bank, buy here with a day's low stop loss, very small stop loss of 1073, which is about 11 rupees from the current market price. And there is a possibility on the way up, we may see this stock hitting 1120 on the upside.
Mm-hmm. Okay. So watch out for it's clearly expecting specific pockets to do well. Rahul, can I ask a follow-up? So while you are constructive on maybe some banks which might be holding out, what about the worst performing sectors, the two of them, which is PSUs and real estate? What stands out here? Do you reckon there could be more pain? Because fundamentally, some of the promises that the businesses have made, both in real estate as well as the PSUs, are actually okay.
Yeah, so these two sectors have enjoyed their performance, and finally we are seeing a crack below the 50-day moving averages. Today's correction, like I said, has been a broad-based correction. So until yesterday, it was only the small caps and the lower mid caps which are feeling the heat of the selling pressure. But now we're seeing a broad-based sell-off where, except a few private banks and a few FMCG stocks, almost everything is gone under the hammer, and we're seeing selling pressure across the board. Now, all depends on how we behave at the 22,000 mark. We've broken that level. Maybe since markets tend to do things in excess on both the sides, so we may if we see tomorrow's opening and tomorrow also if the follow-up selling is there, we could see these two sectors taking further hits. Generally, we've seen 50-day moving average breaking generally calls for a correction extended down to the 100-day moving averages, which is another at least 8 to 10% away. So, it definitely looks a scary scenario at this point in time, but I think we should wait for a day or two for the follow-up, sell-off to happen.
For a day or two for the follow-on sell-off to happen. The problem is, what if you miss the boat? Vijay Chopra, anything that is on your buy list if the price is right now?
I think sit on cash. Cash is king is the call.
Okay.
And wait on the sidelines. If at all you have cash, if at all you are, fortunate enough to have cash in your bank or your trading account, just wait for the dust to settle, as I said earlier. No rush. The market is not going to close tomorrow. No pressure at all. Secondly, people who are holding large caps, no worries. People who are in small caps and mid caps, wait for a bounce back. I think that when markets are so oversold, there is a short covering around the corner. Really cannot comment on when it's going to be, but it's definitely around the corner. So don't sell in a panic. Selling in a panic definitely never helps in the market. So whatever is gone is gone. Just wait. I think markets are going to rebound. Not sure about the stocks, but if at all you get a bounce back in small caps and mid caps, get out and be invested in large caps and better mid caps.
So are you saying that you would sort of review and completely redirect, because you're saying if you see a bounce, get out of some of these small cap counters and redirect to large caps and mid caps?
Yes, definitely, Tamanna. I think that there are still a lot of opportunities, as I said, in the market. Market keeps on giving you opportunities. I think defense is a wonderful sector. Look at the order books of all the bigger companies, and they have corrected quite a bit. I think 20, 25%, 30% from the top. So I think the defense stocks are fantastic. I second Rahul where he says that private banks is the place where you can definitely look at the likes of HDFC Bank, which have corrected, Kotak Bank, which have corrected, even ITC. Why not buy it for a longer term? And HUL, which looks good. So, but again, what's the hurry? My point is that it's not necessary to trade daily in the markets. So this is a wrong perception, wrong concept. Trade daily in the markets. Do your research. Let the markets decide the momentum on the downside or the upside. So let's wait and let the dust settle down. There would be great amount of opportunities where, and of course, there is a lot of news around the SEBI chairman giving statements. Whatever happened in Dubai, this gentleman who's connected to a lot of companies, through some Hawala racket or stuff like that. And, SEBI and the RBI coming heavily on NBFCs, IFL, JM Finance, Paytm earlier. So definitely there is something, which the regulators want. The good thing is that market is not having leverage. So the welcome steps which SEBI, NSE and all have taken, the leverage is very less. So whenever the leverage is less, there's no crash. So there might be corrections, but crash would never happen because leverage takes, markets dizzying heights. And I think that leverage is very little in the market. So I'm not that worried that there's going to be a crash. Corrections are welcome and they should happen. They make the market healthier.
Well, point well taken. Both of you, Vijay Chopra, thanks for joining in today and giving us your thoughts. Really appreciate your time as well. Rahul, just before we wrap up, quick 30-second answer. What is that one factor or statistic from a technical or a derivative perspective that you watch out for tomorrow?
We're not done yet. Probably 22,000 is what should decide. If we are closing probably below that, the average should be below the 22,000 mark. That opens way possibly for 21,500. So I'll rather be cautious here and not jump the gun at this point in time.
What about on the bank Nifty, Rahul? Where are you seeing the levels going there?
Yeah, so Bank Nifty, like I said, relatively it is better placed, but if Nifty fails to find its feet, we may see a bit of pain over here as well. And the brighter side is the higher high, higher low structure is still intact in Bank Nifty, which puts it right on top in case there is a reversal in the Nifty or a bounce back in the Nifty. It is banks which should outperform.
Rahul, point well taken, and which is why I think his call on ICICI Bank as a trading call as well. Brave one, I might add, on the market like this. But, well, thanks, Rahul, for joining in today. A minute and a half left for the markets to shut, but suffice to say that no point looking at what the screen is showing, because the screen is showing red. I mean, maybe a hint of a pull back on the Nifty 50, but everything is getting sold into. Bring up the mid caps and the small caps. That's where the pain has been, right? I mean, you look at the mid cap and the small cap index, look at the micro cap, look at the SME IPO index. There is some serious pain there. Bring up the Nifty contributors. That's all I can say, because mostly things are in the red but for ITC. So if you just look at the contributors list, to show you some semblance of sanity in the banking and the financial space. These are large caps, mind you, which are holding out okay, and ITC at the top. But this side is peppered with losses to everything economy linked, and which is why this kind of mood. And just before Tamanna takes over, the market breadth will just show you how abysmal the broader end of the spectrum is performing. 78 advances only to 1946 declines. I haven't seen such an advanced decline ratio in a really, really long time. So pain in the broader markets.
The tough thing to spot today is a trend. If everything is in a sea of red, then what is hurting most? But having said that, if you pull up, Niraj, all of the relative charts, there is a clear story here. You talked about economy level stocks, but look at all the indices. If you could get those, the public sector banks are hurting. The PSUs are hurting the most. So the PSE index is about 6.5% down. Media, metal, realty, in that order, energy. So all of your core economy, in that sense, really, really hurting. I don't know if there's a stock-specific story or a sector-specific story. More so, some of the factors that our experts spoke about. 15th of March seems to be a very important day. Stress test, electoral bonds, a lot going on in terms of regulatory action. And maybe that's what to watch out for there. There you have it. The Nifty has closed below the 22,000 mark today. The Sensex nearly 930 points down during close.
Yes, it's looked wobbly, and let's see what tomorrow holds in store. I think maybe the global markets have a part to play tomorrow. Let's wait and watch. But for now, from Tamanna and me and the team that has put this show together, thanks so much for tuning in. Try and have a better evening. Hanji, whenever you are. Well, this says it all, mayhem in the broader markets, because frankly, if you look at the index, and yes, the index too, has looked very wobbly today, 1.5% below 22,000, and a lot of stocks falling like 9 pence really. But the broader end of the spectrum is where the pain has been. Mid caps, micro cap, small cap, that whole space has looked very, very ugly in the session today. In about 6 days, the small cap index has lost 10% of its market value. And that tells you a story or two really about what's really happening. Bring up the Nifty 50 heat map and you will see the sea of red, very little green. I mean, to an extent, some of these financials held out because they've corrected in the recent past or not moved anywhere. And ITC, because of the news, 4.5%. But otherwise, everything linked to the economy has looked wobbly today. From a power grid to a Coal India to an Adani Enterprises, NTPC, Tata Steel, Adani Ports. The whole economy linked pocket has looked very, very weak. And on a day when, Reliance and some of the others correct and are amongst the top losers by weight on the index, very little that the index can do. But the broader end of the spectrum, if you see, or if you just look at the sectoral performances once, and then you look at the BSE 500 top losers. So this is what sectorally happened. And PSEs, top draw on the downside, media, metals, energy, courtesy Reliance Industries, and real estate, another 5.5% lost on this one, amongst the worst performing sectors over the last 5 days. So clearly, there is a lot of pain in a bunch of these economy facing indices. And then if you just look at the broader end of the spectrum, sure, an ITC stood out, sure, maybe a couple of others like Ajanta, Abbott, etc. may have done okay. But the list here, look at this and across the board, right? Because you have a PSU called Rides, then you have Tanla Platforms, you have Mishra Dhatu Engineers India, but you also have a Rain Industries, you also have an India Assurance. So across the board, you saw some selling, and it was difficult to single out one particular index as being the lone ranger of sorts. So pain across the board. The last point that I want to make is some key levels like some quant indicators or the Nifty PCR are indicating that maybe, just maybe, we are a tad bit oversold and there might be a chance that there could be a bounce. Does that bounce get bought into? Difficult to say that, but just keep that in mind. I've not highlighted too many other stocks because frankly, you look at the mid cap and the small cap list of companies and you'll only see pain there. So that notwithstanding, the only thing to look forward to is whether there could be a bounce in a session or two, and will that bounce get sold into? Thanks, guys.